Hi, I'm Sarah. I'm part of the ITRO Trading Tools team. Today we'll discuss the recent tensions on Wall Street following the meeting led by Stephen Miran, which sought to stabilize markets in the face of the tariff shock. Stephen Miran, Donald Trump's top economic advisor, struggled to calm investors at a meeting following the chaos on Wall Street caused by the new tariffs. Some attendees considered his responses incoherent and out of place. Although there was some support for the administration's policy of deregulation and tax cuts, concerns about market volatility prevailed. Tensions stemming from Trump's tariff stance and Miran's views on the role of the dollar and global trade heightened anxiety. Meanwhile, the Treasury Secretary attempted to calm sentiment with a more optimistic message. However, the lack of clarity in the economic strategy continues to generate uncertainty. Growing nervousness in the U.S. financial markets after a turbulent week on Wall Street, shaken by the Trump administration's tariff policy. Last Friday, in a closed meeting at the White House, Stephen Miran, President Trump's senior economic advisor and chairman of the Council of Economic Advisors, attempted to calm major hedge fund investors and large asset managers. But according to direct sources, he was unsuccessful. Representatives from firms such as Citadel, Tudor, BlackRock, and PGIM participated. The meeting was organized by Citigroup and coincided with the International Monetary Fund's spring meeting. However, what was supposed to be a calming opportunity turned out to be quite the opposite. Two attendees described Miran's remarks as incoherent and incomplete. One even claimed that Miran was out of touch when the tough questions about tariffs and their impact on markets began. According to a source present, the critical moment came when the prepared speeches were abandoned and open-ended questions began. Financial experts were unconvinced by the answers. Despite this, some found hope in the administration's stance on deregulation and tax cuts, policies that have been well received by certain sectors of the market. Recall that the decline in U.S. Treasury bonds intensified after the announcement of reciprocal tariffs on April 2nd. Although yields have fallen slightly, confidence remains shaken. Volatility persists. In parallel, Treasury Secretary Scott Bessent also spoke to investors last week. His message was more optimistic. He suggested that a trade deal with China could be near, which temporarily boosted stocks. Returning to Miran, his views on the dollar's role in the global monetary system have been controversial. He has argued that the dollar's status as a reserve currency imposes a burden on the United States and has proposed radical ideas such as other countries accepting tariffs without retaliation or even support or conditions on the Treasury to finance global public goods. These ideas, outlined in a widely circulated document in 2024, have generated pushback in the markets. However, sources close to the matter indicate that Miran has been distancing himself from these proposals in recent meetings. The truth is that, at a time when investors are seeking clarity, the U.S. government's economic strategy continues to raise more questions than answers. Join ITRO and transform your investments into sustainable success.